and welcome to our weekly look ahead at the markets here. And what a week it's been. We started off with the collapse of Silicon Valley Bank, as well as Signature. The Fed, FDIC and the Treasury stepped in to protect the deposits of people who had money, or mainly businesses at SVB. We then saw turmoil in stock markets, global markets. Bond markets in particular were exceptionally volatile last week. We saw biggest 2 and 3 day moves in the US 2-year Treasury yield since 1987. The ICE Bank of America Move Index, which measures Treasury market volatility, rose to its highest since 2008, at the height of the banking crisis back then. We saw the VIX also highest since October, all indicative of the kind of turmoil that we've seen in global markets over the last few days, not least of which Credit Suisse, which was the big story in the wake of SVB. We saw Credit Suisse shares tumbling, bonds also moving sharply lower, and credit default swap pricing suggesting imminent default. But the SNB stepped in, the Swiss National Bank stepped in with a lifeline, and then overnight, sometime overnight, the bank drew on that lifeline and said it would take about 50 billion Swiss francs. It's about 50 billion US dollars roughly. And that seemed to steady the ship somewhat. We saw shares rallying quite well on Thursday, but it's a mixed picture. We've seen also trouble at First Republic. That's another bank that's in trouble, or has been in trouble. Now on overnight, Thursday into Friday, the big US banks said that they would deposit $30 billion there. Now First Republic had been through a lot heavy losses at the start of the week. It did rally on Thursday, but then after that announcement, shares actually fell by about 13% in the after hours market. Lots of concerns about whether that effective bailout or backstopping, if you like, by the big Wall Street banks is going to work. Bill Ackman tweeting that you're effectively spreading the risk across the big systemically important banks, which he suggests is maybe not the best idea. And then we've seen the US banks tapping the Fed's emergency liquidity programs and its discount window at record levels. So the banks are tapping into that Fed liquidity channel that it's opened up, so effectively easing financial conditions for the banks at the front end in terms of short-term repo markets and liquidity, short-term liquidity requirements, but it's still looking to tighten. So that's a big story this week, as we look to see whether or not the Fed actually follows through with another rate hike. Markets have been moving around greatly on this. The height of the turmoil on Wednesday had Nomura coming out suggesting that the Fed should be cutting rates this week. But market consensus is a bit more even than that. I think we're looking still at 25 basis points, particularly because the ECB last week followed through on its commitment to raise by 50 basis points. The ECB had basically pre-committed to that in February, and so it was difficult for it to get out of it. And it wanted to also send a signal that it was confident in the European banking system, that there was no great problem there despite what was going on at Credit Suisse. We'll wait to see what happens over the coming days, but it does seem that there are still problems, there are still concerns, and investors are still looking over their shoulder to see where the next shoe might drop. In addition to the Federal Reserve, we have the Swiss National Bank in action, and the Bank of England, which may well pause rate hikes. The latest from the OBR from the budget last week was that inflation will be coming down to 2.9% by the end of the year, so that's good news for the Bank of England if that does play out. So it's probably going to take a step back for now, we think, and it will pause interest rate hikes for the time being at least. So they're the main events really, central bank heavy, but we'll be keeping an eye, of course, on the banking situation, what's going on with the US regional banks, what's going on with Credit Suisse and some of the European banks, and also what's happening on Wall Street as well. Thanks for watching.